Bob, you were talking about the equities in the U.S., and I'm somewhat concerned about the currency in the U.S. going up and what that would do to Nicola's U.S. equities. I'm wondering if there's hedging, or what your feelings are towards hedging in this, 2013 market.
So you're worried about the U.S. equity or U.S. currency
appreciating.
US dollar going. So if that were to happen, if you hold U.S. assets converted back into Canadian dollars, that would add to your returns.
Yes. So that would be a premium.
Now, I mean, because to sort of expand on that, it's a good question. Do you, when you buy assets in the U.S., do you hedge your currency? And we've done this in the past. And in our Canadian equity fund, when we owned U.S. equities, quite often we would buy U.S. dollar forwards, sell them forward, and hedge out that currency. And the reason is because it was a Canadian equity fund. And the only reason we were buying U.S. equities was that the Canadian market isn't very diversified. Yeah. And we wanted exposure to sectors we couldn't find in Canada. And the U.S. is a very diversified market, such as technology and healthcare. But we didn't necessarily want to take a bet on the currency. So we did sell some of that forward. But overall, I think when you're investing in a foreign market, currency is part of what you're investing in. And quite frankly, right now, as to your point, we like the U.S. dollar exposure. And I think that even globally, the U.S. economy and U.S. dollar is considered very strong and is considered in the world today the least dirty shirt, as people put it.
Well, in people's accounts, I know why you had like a U.S. account before. So if a person's selling and getting some income out of that, would that get converted back into Canadian, or does it stay in U.S. within the fund?
If you have a U.S. dollar account, then any assets you have that you sell would not be converted into Canadian dollars. You can hold a U.S. asset in a Canadian account, and in that case, it would get converted.
But how do your funds work?
We would have both. You have the ability to have a U.S. account. And so if you buy...
If you have a separate fund.
Correct.
Okay, separate account for that.
So if you want to buy a U.S. stock, you can hold it in a U.S. account. All the dividends that would accumulate in that U.S. account and would not be converted to Canadian dollars.
And then you would miss out on if there was a gain.
Yeah.
Yeah. So maybe at this point in time, it wouldn't be a recommended thing to do if a person thought that, depending if you wanted U.S. funds to spend.
A lot of our clients, one of the reasons why, and David, maybe you want to talk about this, they have U.S. liabilities if they travel a lot or spend some time in the U.S. and they want some U.S. dollar exposure, so they would not hedge that. And
that's Rob's point. A lot of our clients who own Spire US, that pays a very healthy cash flow. As I mentioned, we increased that to 6% this year. A lot of our Snowbird clients accumulate those U.S. dollars from the U.S. real estate assets, from some of the U.S. equities that they own, and that cash flow accumulates in their account, and they actually use that for spending when they go to the United States, and they're not running the risk of having to convert Canadian currency at an inopportune time to facilitate their spending. On the other hand, if it's such that it's an opportunity to convert Canadian dollars to the U.S. because the currency's moved in the opposite direction, then you might just continue to accumulate the U.S. currency, but convert your Canadian.